Everyone. So my name is Elvira Caldera, and I am the Portfolio and Loan Operations Manager here at MHP. And although this particular presentation is regarding down payment assistance, for our program, we couldn't go over it without doing an overview of our program in itself, because in order to get the assistance that we offer, you must qualify for a one mortgage. So I'm going to do as briefly as I can, go over the qualifications and then go into greater details on the programs for that covers down payment and closing costs. So I'm going to share my screen here. Let me know if you can see it. Denisha, you can see it, just in case.
Yes.
Perfect. Okay, thank you. I always wonder if it works. Thank you. So here at MHP, who we are a state public nonprofit affordable housing organization. We were established in 1985 to help increase the supply of affordable housing in Massachusetts. So our vision is a world in which everyone has equitable access to safe, healthy, and affordable home in a thriving community. Our mission as a leader and innovator, MHP expands across the affordable housing and promotes housing equity in community across the Commonwealth. We have 4 values. One of them is equity, innovation, stability, and community. And so Denisha will share with you all here so you can get a little bit more specific on each of those values. And so far, we've helped over 25,000 first-time homebuyers. Our program is a state-sponsored below-market mortgage product. It's designed for first-time homebuyer, and it was created to help address pattern of racial discrimination in the mortgage lending and has built-in affordable features that makes your dollar go further. So the key features to the one mortgage is that all of our participating lenders provide buyers with a discounted interest rate. So whatever the interest rate is, they publish those daily. Our lenders offer a 0.30% off of that interest rate. We also offer low down payment requirements. So that's 3% down payment for condos, single family, and 2-family properties. Only 1.5% of those funds has to be your own money. And then 5% requirement for down payment if you are buying a 3-family, and only 3% of that funds has to be of your own funds. We unfortunately do not finance anything over a 3-family property. With these low down payment requirements, our program also does not have private mortgage insurance, and this is saving you hundreds of dollars each month with that, because usually that's included in your monthly payments. Our program is based on income. One mortgage borrower may also qualify for additional monthly savings during their first 7 years of ownership through our MHP subsidy program, which reduces your monthly mortgage payment in the first years or early years of your home of ownership. So what are the requirements? One of the requirements is that you must be a first-time home buyer. And this is defined as borrowers who have not owned a home in the last 3 years. And all household members, including the mortgager, so whoever's going to be on the loan, their spouses, fiance, domestic partners, or any person at the age of 18 or older who expects to occupy the property must be first-time home buyers. So this is something that your lender will go over with you as they are qualifying you for a one mortgage. And so they'll, go into greater details at what they're going to be looking for that specific requirements. We do offer exceptions to the first-time home buyer requirement. It is viewed on a case-by-case basis. So whatever your case is, you will present that to your lender. They will then come to one of their direct contact with MHP, and then we will review it and we can grant some exception to those cases. We also have a household income limit for our program. And so the income limits vary by county and your household size. These income limits come out once a year. And once they're published, that's what we will go by based on the county that you're living in and the household size. Your lender will calculate, how will your lender calculate it? So they use your gross income that's coming into the household, including income of anyone in the household as well that is over the age of 18. One thing I would add to that is if they are a full-time student, those income can be exempt. You would just have to, again, let your loan officer know. Your lender will collect the past 30 days pay stub and use the date information on your pay stub for the year-to-date gross income, and that's what they will project that income forward for the full 12 months. Income limits are updated annually, as I mentioned earlier, and there is no income recertification once you have a one mortgage. So we don't recertify you once you've closed on your home. We also have asset limits. So our asset limit was just recently increased. Your household asset must be less than $100,000. And the incomes or the assets that we count in that $100,000 limit is funds that are in your checking or savings account, stocks, bonds, gifted money, including gift of equity. So if you're purchasing a home from a family member at a low market value, and whatever the equity is that on that purchase price, that is counted towards the $100,000 limit, the capital investments, and then real property. So if you have an investment or I would say equity on a property, that's also included in that. What we do exclude are retirement accounts such as 401k, 403b, and Roth IRAs, government approved college savings plan, municipally funded buy down programs, community, municipality, or employee funded down payment or closing cost assistance, and verified match savings plan, which you're going to be hearing about that as well here tonight. So those are excluded from that limit. We also have a credit score requirement. So our minimum credit score for single and condo are 640, and for any two-family or three-family, it's 660. We do allow alternative credit options for those who may lack documentation or credit history. But we also we don't use risk-based pricing. So you'll get the same low interest rate whether your credit score is 640 or 680. So after closing, what are the requirements? You must use the property as your primary residence. You must also complete a home safe post-purchase class within a year of your closing. And the post-purchase class is kind of part of our home safe program, and FEA is part of that program. So that offers you post-purchase education, post-purchase counseling. So if you are having some difficulties with your mortgage payment. So they kind of help you with that, which is also aligned with the delinquency counseling and refinancing counseling. Our program provide additional education and support to borrowers after closing. Counseling is not required. However, it is a tool for one mortgage borrower to utilize, and it is completely free. You do not get charged for taking one of these classes. So now we're going to go into our 1+ mortgage. So 1+ mortgage are for borrowers who are eligible borrowers for the 1+ is you must live in one of these 29 communities. And so if you currently live here, you don't have to purchase in these areas. You just must be currently living in those areas. So again, Attleboro, Barnstable, Boston, Brockton, Chelsea, these are the areas in which you are eligible if you live there, if you live in the community. So the 1+ mortgage offers a additional interest rate discount, which is a 1% below the one mortgage basis point. So that means that, as I mentioned earlier, when you get a one mortgage, you're already at 3.30 basis points below the rate. But with this one mortgage, you'll get an additional 1%. So if you take a look on the bottom of the slide here, it shows a rate comparison. So these are just an example. They are, I'm sure, have changed since this presentation. But the Freddie 30-year fixed, if it is at 6.54, your one mortgage rate would be 6.24. And if you qualify for the 1+, your rate will be 5.24. So that's the great difference here on the program. It also offers a 2% down payment assistance, and that's 2% of the purchase price. So you'll get the 1% for the rate reduction, 2% for the down payment. And we also do have closing cost assistance for eligible closing costs. And this includes origination charges, prepaids, escrow, settlement, survey, plot plans. So a lot of these you may not, if you're just starting the process, you may not know what these are, but your lender, as I mentioned, will definitely be a point guard for you guys to answer or let you know what these fees are. But that some of those can be covered. And so with all these three items, you may get up to $50,000 for the down payment assistance. It just cannot exceed that. So in your case, depending on if we've already taken the 1% for the rate reduction and the 2% for the closing costs, anything remaining will go towards 2% for down payment, anything remaining will go towards the closing costs. So Afford More in Boston. We also offer a 1+ Boston program, and these are for borrowers who are looking to purchase in Boston. So you must be currently living in the city of Boston. You must be purchasing in the city of Boston. It offers a 1% rate reduction for less than 80% area median income, up to 2% of the purchase price in down payment assistance for borrowers purchasing deed restricted properties, up to 3% of the purchase price for borrower purchasing a market rate property, and it also offers eligible closing costs. Here is just a slide to just take a quick comparison of the different programs. So a conventional loan, a one loan, and a 1+ Boston loan. This is just reiterating the down payment assistance requirements. The difference in the rate, which you'll see here, the 6%, 5.7 or 4.7, and the ability to not have the private mortgage insurance. And of course, you will still have your taxes and insurance. And if you also qualify for our subsidy assistance, you will see that your affordability for purchase price is going to increase with the one and more for the One Plus Boston, but your payments are going to be relatively the same. And again, these vary based on the rate, but just to compare the no PMI, and if you qualify for the subsidy, your monthly payments are going to be affordable. And in this slide, we talk about the One Mortgage, the One Plus, and then the One Plus Boston. So these are all MHP programs. Again, they're all 30-year fixed. The one you can buy anywhere in Massachusetts. You can buy anywhere in Massachusetts as well for the One Plus. However, you just must be currently living in one of those communities. And then for the One Plus Boston, you must be living in Boston. All three of these programs offer a rate reduction. All three offer the low down payment requirements. All three also offer the no PMI requirements. And then the One Plus and One Plus Boston are the program that offers the down payment and closing costs. With our program, I would add that you can stack as much program. We allow you to utilize as many programs that you qualify for. So if you getting down payment assistance from the city or town that you live in, the stash program, you can combine the Federal Home Loan Bank program. You can combine them with us, with our program as well. So if you think you are eligible and you qualify for our program, what should you do next? So we have our website here that you can take a look. And you can find a lender if you don't already have one that you're working with. So our program you must meet with one of our approved lenders to go through to get the program. We also offer other down payment resources and additional information on our program. We have a calculator that you can go through and see what you would qualify for. So a lot of people like to use that. If you are buying a 2 or 3 family, you must complete a pre-purchase multifamily landlord course, and that's through one of our approved agencies. So FEA is one of them. So if you go through there, through FEA, you are already ahead. And we also do offer Section 8 to home ownership program. This is a program we have a few lenders that offer or works with us on this. But the first step, if you are interested in this, and you have Section 8, is to contact your Section 8 provider to see if they have the MHP1 program approved administration plan. And then you will go through that process with them, and then they'll connect you with the lender, and then you can go forward with that. But it is a great program that a lot of people have used. All right, so for more information, again, you can reach out to our general inbox, which is our onemortgage@mhp.net, or take a visit at our website, mhp.net/onemortgage, or you can also call us on our toll-free number here. We reach any voicemails that are left here. We return emails in as much timely fashion as we can. And so we try to connect with you all as fast as you can as you're going through the process. All right, and that concludes my presentation.
Awesome.
So I will stop sharing.
Sarah.
Yep.
So one of the questions in the chat that I am actually not 100% sure of the answer. Hold on, let me go back. Where'd it go? Where did it go?
Sorry, I wasn't keeping track. So I probably
with the One Plus,
Mhm.
is it they want to buy a multifamily? Is it the same rule that you have to live in the property with all immediate family members, and they also must be first-time home buyers?
So
So,
this is for, so if you're buying a multifamily and you're living with the unit in which, like if you're gonna live, let's say on the first floor,
mhm,
that's the income that we're going to count. But if, let's say you're renting the other unit to family members, we're not going to be counting that. So I know that some people may buy a multifamily and then they rent to family members. We're not counting their income, no.
okay. So the city of Boston has their co-purchasing pilot program, which I know
Mhm,
that's just city of Boston, it's not across the state. How
mhm.
does so that each person, how it's set up is that each person can almost like purchase a floor. You guys don't, that rule
Yeah,
does not
so
apply to you.
we were working with the city of Boston with those anyone who's coming through the one mortgage with that in that program, we will work with them to, meet the requirements for that program. Yeah,
Okay, but that is not statewide. That is specific to Boston.
correct. Yes.
There we go. Okay, perfect. Um, are you able to show folks where they would find the AMI percentages for the different counties or the different towns that they live in? So they know where to
Yeah,
find
I
it.
think let me I'm gonna stop sharing and I'll go to our website and I can get to our um,
When I'm emailing all of the information, you'll get.
just trying to get into it and get right to the page.
So I just put because I just Google it, so I don't know where it is on the on the page, guys. So I put the link to the PDF in the chat. So you'll
Yeah.
have it in the chat with the AMI limits. Did you find it yet, Elvira?
We have our resource.
Because I can pull it up on my screen in terms of just the actual
You're
document.
probably faster at this than I am.
Let me share screen.
Homeownership, homeownership resources.
So I'm on the screen right now, guys, is the income limits for 2026. They are updated every spring, so like April, May is when the numbers,
Yes.
the new numbers are adjusted or they come out. So depending on what county you live in, so here's Barnstable County. They give you all of the towns or cities that fall within that county. And then they show you the income limits that are eligible by household size. So if you are a single person, you can make, I'll just say up to 98,850 would be the max so that you're 100% AMI. And then to qualify for some of their other programs, you need to make up to 79,100, which is different than if you were a household of four people, for example, where now that number increases to 141,200. And what I wanted to show you guys here is that it does vary by county. So you should look up the county that you're in. So we'll go down because a lot of people are in Suffolk County, for example. And you see the numbers are, it goes up to $120,000 for a single person. So definitely find your county. I'll put the link in the chat again. And then you can just confirm that you fall within the income guidelines. And honestly, once you start talking to the loan officers, they'll do all of their special math to figure out what counts as income. Because they do count it a little bit different than how we would ourselves count income. For us, everything is income. For
Yeah.
lenders, not so much.
Yeah, it's very important to connect with the lender and they'll definitely go over what it's counting for income. I'm gonna also drop in there the page for just the resource on homeownership as well. So if you want to take a look and then you'll see that there.
Awesome. Thank you so much, Elvira.